I used to think that your best move is to buy in your own city. Why? Because you know it and you can manage it. And I like big city because people rent in the big city. I'm not sure what you were referring to when you're saying, if you're talking about going to Ottawa, you're going to pay more than here. If you're talking about Quebec City, you'll pay a little bit less than here, but it's still a good market. I know that Patrice is heavily involved in Quebec City. But I'm not sure that's what you were saying to me. What are you exactly thinking in terms of location?
Location-wise, I don't know. Let's say I have a friend that owns in Sherbrooke. Let's say areas like Granby. Do you venture out into markets where, let's say, the cap rates are really good, but the areas are slightly sketchy, like let's say Valleyfield, Saint Jerome? Do you stay in like Gatineau? So because I'm presuming that if you stay in Montreal and your cash flows are low, your expansion rate is slightly slower. So if you have a better cash flow, then you can later on maybe acquire those deals that are lower cash flow, and then you can juice them. But to really accelerate your growth, what's your opinion on the Valleyfields, the Sherbrooks, and the Gatineaus?
Because I did go actually and buy in Ontario at one point, but the problem that we had there was that somebody else was managing the property. And it was really hard, mostly for Norm. I know Norm was very uncomfortable having somebody else manage, and they weren't doing a good job of it, to be honest with you. So that's part of the problem when you start going too far away. You start needing outside management, and if you don't have the right group, it could be problematic for you. It becomes incredibly frustrating. Trust me on that. It's scary. And if you have a company that's doing it, often these management companies are counter-incented, just so you know. If you look at the way their deal is structured, the contract that you're going to sign with them, it's counter-incentive. They actually get paid for all sorts of things that aren't necessarily good for you. So you've got to really be careful. As far as what you were talking about, people live all over the place. Let's deal with reality. And you're right, as you're further away from Montreal, you might be dealing with better cap rates. Now, usually the reason that you're dealing with better cap rates, better as in higher, is cap rates in a sense is a reflection of risk. So think for a minute. When a cap rate is at 3.5, it's because the perception from investors is that it's very low risk. So they're willing to overpay because they feel in the long run they're going to do well. That's why in Vancouver and Toronto they're paying crazy cap rates, because they figure it's low risk. If you go to Texas, Austin, to some of these outlying areas, you're going to notice you can buy even at a 10 cap. Still, today. It's crazy. But guess why? Because at a 10 cap, it's reflecting that there's risk there. And there's two ways there could be risk. One is that you might have a big vacancy problem. Two, it could be because there are wild and crazy tenants there that are going to wreck your place, which does happen, by the way. And three, there's so much land in some of these places that if all of a sudden there's a huge demand, you're fully rented and you're making a fortune, somebody's going to build next door to you.